So welcome again. So now we are going to pick up after having completed till up to 2.9, 2.10 is on the cards. Hills Corporation has two branches. This time this organization is having two branches. One is at Jaipur and another one is at Lucknow. Goods are invoiced to the branch at cost plus 50%. Cost plus 50%. Rate is on cost, no doubt about that. But this time margin is 50. Branch remits all the cash received from head office. So whatever cash branch will collect, it will remit to the head office, and all the expenses of the branch are met by the head office, natural. From the following particulars, prepare necessary accounts as per stock and data system to show the profit earned by Jaipur branch. Although this head office has got two branches, but we are supposed to do accounting in respect of Jaipur branch, correct? Now the very first information is stock on 1st January. Now nothing is mentioned, you will presume it at invoice price. Now daters are given to us, so daters 6,800 and then goods sent to branch at cost is given. So that means this item is at cost, we will have to convert it into invoice price. Then this time cash and credit sales both are given in the question, and then cash collected from daters, it will be written only in daters account. Goods returned by head office to branch. Correct. First of all, you are going to write it on the credit side of the branch stock, and later on you will do the loading also. Now this is the line which is important. Goods transferred from Lucknow branch to Jaipur branch. Remember one thing, this head office is having two branches, as I told you a moment ago. One is Lucknow branch and another one is Jaipur branch. And we are doing the accounting for Jaipur branch. That means we are Jaipur branch. And here it is written that Lucknow branch has transferred some goods to Jaipur branch. That means your branch, Jaipur branch, is this time receiving the goods. So that is why goods transferred. If you remember earlier when we discussed this particular topic, stock and data system over there, I talked about this particular fact that goods transferred can appear on the credit side of the branch stock account, or it can appear on the debit side, depending upon the fact whether we are receiving the goods or whether our branch is what we call transferring the goods. So this time our branch is receiving the goods. So that is why this item will be written on the debit side of the branch stock account, correct? Because goods have been transferred by other branch to us. So we are the receiving entity, number one. And because we are receiving the entity, where are my glasses actually? That is the reason I am facing a bit of problem. Glasses, I must have forgotten my glasses. Okay, anyway, if glasses are not there, I will take this class without glasses. Correct, glasses are not there. So 1,500, and then we are being given here shortage of stock 450. In this particular question, you are already given the amount of shortage. Sometimes shortage or deficiency or spoilage. Such items may already be given in the question. The treatment will be like abnormal loss. I've already told you, you will split it into two parts, load and cost. First, you are going to write 450 on the credit side of the branch stock, and then you are going to take it, what we call loaded portion, you are going to take on the debit side of the branch adjustment and cost on the P&L. Discount allowed to customer, daters and P&L. Expenses at branch, of course, in the P&L. So this is how you are going to do this particular question. Should not be a big problem for you. Okay. So we will do this particular question, correct? This is your branch stock account. But before we attempt this particular question, 2.10. Here in this particular question, first of all, rate, cost price plus margin is equal to invoice price. Correct? Now rate is given on cost. Obviously you will consider cost as 100. Your margin will be 50 and your invoice price will be 150. And your rate of loading on invoice price will be 50 by 150, that is 1 by 3. This is your rate of loading on invoice price. And rate of loading on cost will be 50 by 100, that is 1 by 2. Is it clear to you or not? Now I am preparing branch stock account. This is our branch stock account. Branch stock account. Then we will prepare branch adjustment account. This is our branch adjustment account. Branch adjustment account. And then we will prepare branch profit and loss account. This is our branch profit and loss account. And afterwards, we will also prepare branch debtors account. This is our branch debtors account also. Branch debtors account in this case, correct? Now, as far as branch stock account is concerned, now first information in this particular question is with respect to stock, and nothing is mentioned whether it is at invoice price or not. We will consider it at invoice price 9,300. You are going to write it over here. Is it clear to you? And then you will write over here loading, load on. Now load on opening stock. Now opening stock is 9,300. And I told you just a moment ago, rate of loading on invoice price is 1/3. So 3,100 will be your loaded amount. Now opening debtors are given. Now debtors will be written under debtors, that is 6,800. 6,800. Then goods sent to branch is given in the question. Goods sent to branch. And as you know, in this particular question, it is given at cost. So cost is 34,000. So you need to bring it to invoice price. In order to bring it to invoice price, you need to apply rate of loading on cost, which is 1/2. So 17,000 I will add. Now this item will become at invoice price at a value of 51,000. We will take the loading. We will write here goods sent to branch account. Now this is at invoice price 51,000. So I will write 1/3 to find out the loading. Obviously the loading will be 17,000. I can straight away write 17,000. Then cash sales and credit sales are given in this particular question. So cash sales, I will write here. Amount of cash sales which is given to us is 25010. And then we are being given credit sales also. An amount of credit sales is actually 31,000. We must not forget that credit sales appear in debtors account also. And we are preparing debtors account. Credit sales 31,000. You will write credit sales over here, that is equal to 31,000. And then cash collected from debtors, as you know, is put on the credit side of debtors in this particular method. Nowhere else, 30,400. Then we are being given goods returned by branch to head office. So branch has returned the goods. So on the credit side of branch stock account, we will write goods sent to branch returns, and returns is equal to 1,200. So we will take the loading on now, and we will write here load on goods sent to branch returns. Goods sent to branch returns. 1,200 worth of goods have been returned to us. So 1/3, 400 will be the loading. Next item is goods transferred from Lucknow branch to Jaipur branch. And we are Jaipur branch. That means Lucknow branch has transferred goods to us. So that is why goods transferred this time will be put on the debit side, because we are receiving. Goods transferred, you can write completely. Goods transferred from Lucknow branch. So goods transferred from Lucknow branch, we will write on the debit side 1,500. And we will take the loading also. We will write here loading on goods transferred. Goods transferred. Loading is always done on the opposite side. Goods transferred are 1,500. So 1/3 will be your loading, and the loading amount will be 500. Then in this particular case, shortage of stock is already given. Shortage or deficiency are one and same thing. Generally, when we get balancing figure on the credit side, it is considered as deficiency or shortage. But sometime in the question it is given. So shortage you are being given. It is also known as deficiency. Shortage is 450. The treatment is similar to abnormal loss. Correct? So we will write here loading on shortage or deficiency. 450 is the amount. 1/3 will be your loading, 150. And then you will write shortage at cost. Shortage at cost. Now shortage at cost will be 450 minus 150, that is equal to 300. Discount allowed to customer. First, you are going to write it on the credit side of the debtors account. Discount. Amount of discount given to you is 200. So you will write here 200, and then you are going to write here discount in the P&L account also. Amount of discount is 200. After that, we are being given expenses. So we will write the amount of expenses, that is equal to 5,400. 5,400 total expenses. So this is the question. Now in this particular question, first of all, I am going to actually tally out branch stock account. Now in this case, it's a pretty interesting question. I will tell you your debit side is bigger than your credit side, so balancing figure is appearing on the credit side. And the balancing figure will be, when you are going to take the balance, it will be equal to 4140. Now you tell me, what should I consider it? If you remember, I have told you, if the balancing figure appears on the credit side, then the first preference must be given to closing stock. And in this question, closing stock is not given. So that is the reason you will consider this balancing figure as closing stock. However, if closing stock is given, then balancing figure is treated as shortage or deficiency, but in this question shortage or deficiency is already given. So anyway, the first point is that actually the first preference should be closing stock, and closing stock is not given, so we will consider it as closing stock. Now we will take the loading also. We will write here loading on closing stock. Now closing stock is 4140 into 1 by 3. So into 1 by 3 will be equal to 1380. This will be the loading. And now we are going to compute the gross profit. So when you are going to compute the gross profit, your gross profit will be equal to 18,670. 18,670 will be your gross profit. You are going to write gross profit over here, 18,670. And finally, now you will find out your net profit. Your net profit will be 12,770. 12,770 will be your net profit. Is it clear to you or not? And if you are going to tally out your debtors account, you will not get anything worthy because it will be closing balance, and I have already told you in this method we are not going to write closing balance anywhere else. So 37,800 is the total of the debit side, and from there on you are going to subtract 30,600. So balancing figure will be 7,200. But it is of no use. Is it clear to you? So well, after having completed this one, now we are in a position to pick up the next part. What is given in the next question? Let's have a look. Now 2.11 is the next question. Let me also pull out the sheets because sheets are there intermingling. 2.11, it is related to Finlay, India. Okay, I have got the sheet. 2.11. Finlay India Textile opened a branch. They have opened a branch on 1st January 2027. If we are opening a branch, no question of any opening stock or opening debtors, I need not require to tell you. Then we are being given goods invoiced at selling price, which was fixed by adding 25% to the cost. So rate of profit, rate of margin is on cost. Cost will be 100, margin 25, invoice price 125. And rate of loading on invoice price will be 1 by 5 and on cost will be 1 by 4. From the following particulars relating to 2027, ascertain the profit or loss made at the branch under stock and data system. So first of all, in this particular question, it is given that goods sent to branch 1,40,000. Actually, it's a simple question. I did not require to tell you much. So you are going to write it goods sent to branch on the debit side of the branch stock count. Is it clear to you? And now we will take the loading. So loading will be written in the branch. This is your branch adjustment account. You will write here loading on goods sent to branch account. You can straight away write 28,000, 1,40,000 into 1 by 5. Now the next is cash sales and credit sales. Both cash sales and credit sales will be written on the credit side of the branch stock account. So this is your branch stock account. You will write here cash sales 50,000. You will write your credit sales 70,000. But you should not forget to write your credit sale on the debit side of the branch debtors account. This is your debtors account. In the debtors account, you will be writing credit sale 70,000. Because it's a new branch, no question of having any opening balance. Then in this question, we are being given cash receipt from debtors. Now cash receipt from debtors, I have told you so many times now, under this method we write it only on the credit side of the debtors account, correct? Next item is your discount allowed to debtors. Need not require to tell you once again that it will be written on the credit side of the debtors account and then it will be taken to debit side of profit and loss account. So discount here I have written, correct, on the debit side of P&L. Then goods returned by customer. Now this is pretty important item. If you remember, under debtor system, goods returned by debtors, we used to put it only in the debtors account on the credit side because it is a transaction between what we call debtors and customer. In the first method, we used to put it only in the debtors account. But in this method, see here, first of all, sales return, goods returned by debtors are termed as sales return. We will write it on the debtors account. I have already told you sales return means goods returned by such customer to whom the goods have been sold on credit. Sales return always written on the opposite side of the credit sales because we write credit sales here. So quite obviously we need to write what we call sales return over here. No question of loading because it is a transaction between branch and branch debtors. But in this method, because we write credit sales here also in branch stock account, that is why sales return will also find place on the opposite side, correct? That means sales return will first of all be written on the credit side of the debtors and will also be written on the debit side of the branch stock account. So this is quite interesting transaction. You need to take care of that. Cash remitted to branch. So head office has sent cash for rent, salary, sundry expenses. That means rent, salary and sundry expenses are our expenses. So we will write branch expenses. So I have combined all these items, salary, rent and sundry expenses, and I have written here 8,000 in the P&L account. Finally, in this particular question, once again, we are being given defective cloth found in sales written off. Defective cloth. If you will go through the question, it is written Finlay India Textiles. So textile business, that means they are dealing in cloth, and here it is written defective cloth. So it is loss of goods, no doubt about that. So defective cloth is nothing but your spoilage. So you are going to write on the credit side of the branch stock account, that is defective cloth, and you will write here 200. And the treatment is similar to abnormal loss. First of all, you will write the loading on shortage or spoilage, whatever it is, correct? 200 into 1 by 5, 40 will be written on the debit side of branch stock account, and in the P&L account you are going to write spoilage or shortage or deficiency at cost. 200 minus 40, 160. Is it clear to you or not? And then here, with that we come to an end, and now we will tally our branch stock account. Now interestingly, in this particular question, you will get a balancing figure 21,800 on the credit side of the branch stock account. And similar to the last question, even in this particular question, closing stock is not given. That is why you will consider this figure as closing stock. Is it clear to you? Now this closing stock 21,800, you must not forget to write loading on closing stock. 1 by 5 of 21,800 will be 4,360. And now you are going to tally out this particular account. 28,000 minus 4,360 minus 40, your amount will be 23,600. Now this 23,600 you will write here gross profit, correct? And then from there on you are going to subtract your expenses, your discount, your loading, your shortage at cost or spoilage at cost, and your net profit will be 13,840. And if you are going to tally your what we call debtors account, you will get closing balance, and it is not of much importance. So this was easy question. 2.12 now, pay attention. And here it is written Messrs 9 O'Clock Limited of Y Limited opened a branch at City X on 1st of April 2025. So once again a new branch has been opened. If it is a new branch, I have been telling you now and told you now so often and on umpteenth occasion that no question of any opening stock or opening datas will arise. Goods are invoiced to the branch office at selling price. At selling price means at invoice price, which is cost plus 25%. Which is cost plus 25% means rate is still on cost. So even in this question, rate is on cost. Is it clear to you? Cost plus 25%. Now here it is written goods sent to branch at cost to head office. So this item is at cost. First of all, you need to understand. Then again, cash and credit sales are given in this particular question. Now you know the treatment. Cash collected from debtors, you know the treatment. Discount allowed to debtors, you know the treatment. Correct? And all these expenses for which cash have been sent by branch, but these expenses will be written on the debit side of P&L. And similar to the last question, even in this particular question, you are being given spoilage. So spoilage is already given in the question, written off. So it is similar to what we call abnormal loss. We will do the treatment. And then closing stock is written, but nothing is mentioned. So you are going to treat it at what we call invoice price. Is it clear to you? Although this question you can manage of your own, and you should be able to, but I will do it for you. This is question number 2.12. Okay, let me keep the sheet of the question. 2.12. Messrs. 9 o'clock. Okay. 2.9 is the question now. 2.12, sorry. 2.12. So under this question, first of all, we will take care of rates. So your cost price, margin, cost price, margin, and invoice price. Rate is given on cost 100, margin is 25, and invoice price is 125. So rate of loading on invoice price is 1 by 5, and 25 by 100, 1 by 4 will be rate of loading on what we call your cost price. Is it clear to you? Now we will prepare the ledgers. And if we are going to prepare the ledgers, in this particular case, branch stock account, branch stock account. We write here branch stock account. Then we are going to prepare branch adjustment account. All these are formalities which we need to carry out. Branch adjustment account. This is branch adjustment. Then we will prepare branch P&L. We will write here branch P&L. And if you want to prepare branch datas, then you must. This is your branch datas. Now in this particular question, the first item is, I've already told you, no question of any opening stock, and it is not necessary to write. This is just for your reference. It's a newly opened branch, so no question of opening stock. Now, goods sent to branch are given to you. Goods sent to branch at cost is given to you. At cost, 2,80,800. 2,80,800, this is at cost. So we need to convert it into invoice price, and for that we need to apply 1 by 4. If I am going to apply 1 by 4, it will be equal to 70,200. So at invoice price, it will be equal to 3,51,000. 3,51,000. Is it clear to you? Now on the opposite side, I will write load on goods sent to branch account. So goods sent to branch account. Now the invoice price of the goods sent is 3,51,000. And rate of loading on invoice price is 1 by 5, but you are going to get the same amount, that is 70,200 as the margin. Then in this question, cash sales, credit sales are given. Cash sales 125, cash sales 1,25,000, credit sales 1,75,000, 1,75,000. Now credit sales will also be put on the debit side of the debtors account. So no question of opening balance. It's a new branch. We will write here credit sales. Credit sales is 1,75,000. So I will be writing here 1,75,000. Then we are being given cash collected from debtors. So I will write here by cash. An amount of cash collected from debtors is 1,56,000. So I will be writing 1,56,000. Discount allowed is 4,000. Discount I am going to write here on the credit side of the branch debtors. That happens to be 4,000. So you will be writing here 4,000. And further we will take discount to the debit of P&L account. That is 4,000. Then all the expenses, wages, freight and other expenses. Wages 3,000, freight 11,000. That makes 14 plus 6 other expenses. So I am directly writing expenses 20,000. 14 plus 6. So all the expenses 20,000 I am going to write here. Correct? Then in this particular question, spoilage is given to us. So spoilage is nothing but your shortage or spoilage. The term spoilage, shortage and deficiency are used synonymously. Spoilage, shortage, deficiency. These terms are used synonymously. Is it clear to you or not? And it is given in the question actually. So it is given to you in this particular question, that is equal to 500. So 500 is the amount of spoilage. This question looks pretty innocent till up to this particular stage, isn't it? It looks there is nothing in this particular question, but let me tell you, this question carries a very heavy point. What is that point? I will come to that, but just pay attention. So loading on spoilage, that is 500 into 1 by 5, that is equal to 100. And then spoilage at cost, spoilage at cost, 500 minus 100, that is 400. Correct? And now in this question we are being given closing stock also. So this is our closing stock. And closing stock is 55,500. Of course it is at invoice price because nothing is mentioned. So 55,500. So loading on closing stock, 55,500 into 1 by 5, that is equal to 11,100. Now as I told you, for a while it seems that it's a very simple question, but it is a very tricky question. How it is a tricky question? Now just pay attention. For your sake, I will tell you that credit side total is coming to 3,56,000. 3 lakh. This is 55,500 actually. 55,500. So 6, right. So credit side total is 3,56,000 and here it is 3,51,000. So I will tell you the balancing figure. The balancing figure is 5,000. Now you tell me, first of all, this figure is appearing on the debit side of the branch stock account. Now time and again I have been telling you that if the figure appears on the debit side, your first preference should be to treat it as opening stock. But in this question, it cannot be treated as opening stock because it's a new branch. So we cannot treat it as opening stock. Then second preference is given to goods sent to branch account, but goods sent to branch account is given. Goods sent to branch is given, so we cannot treat it as goods sent to branch account. Then third preference is we should treat it as surplus. Now you let me know, should I treat it as surplus or not? Should I treat it as surplus or not? Now 99.99% of the student actually think that we should treat it as surplus, because as per rules we cannot take it as opening stock and we cannot take it as goods sent to branch because it is given. So only alternative left off with us is to treat it as surplus. But in this particular question you cannot treat it as surplus. Why we cannot treat it as surplus? The reason being is that on the opposite side, we have spoilage, shortage or deficiency. Now, surplus and deficiency cannot exist side by side. So that is the reason in this case, you cannot treat it as surplus. Is it clear to you or not? So that is why I told you this question carries a very heavy point, and this is the heavy point. So now finally, how will you deal with this balancing figure? So now you are left up with no alternative. So you will have to treat it as sales return, because only other figure apart from opening stock, goods sent to branch, surplus, only other figure which can arise on the debit side of branch stock account is sales return. So you will have to take it as sales return. Is it clear to you or not? I have written below in the notes also all these points which I mentioned. We cannot treat it as opening stock because it's a new branch. We cannot treat it as goods sent to branch because it is already available. Also, we cannot treat it as surplus because deficiency is existing on the opposite side. So now we will have to take it as sales return. And loading of sales return is never done, as you know. So sales return must be put on the credit side of debtors also. So sales return 5,000 I will write over here. And later on, when I am going to tally out my debtors account, I will get 175 minus 165. So 10,000 will be closing balance. But it is just for academic sake, correct? Balancing figure is your 10,000. So this is how you are going to tally in this particular question your branch stock account. And now we need to tally out our branch adjustment account. And when we are going to tally it out, obviously we are going to get gross profit. 200 cancel, 70 minus 11 will be equal to 59,000. So gross profit will be equal to 59,000. And now I will be writing here gross profit brought down 59,000. And from there on, I will subtract 24,400 to get my net profit, which will be equal to 34,600. So this question seems very simple, but actually one intricate point is over there. So you need to take care of this particular point. Is it clear to you or not? After this, we go to the next question now. Let's see what is given in the next question. See, in the notes, I have written it, which I mentioned earlier. In this question, credit side is bigger, and the hence balancing figure shall appear on the debit side. I'm talking about the question which we did, which cannot be taken as opening stock as it is a new branch. It cannot be taken as surplus also, as spoilage is given, and spoilage and surplus cannot coexist. So only alternative left is to treat it as sales return. In your solution notes, I have given it. Now we move over to the next question, 2.13, and let's see what is given in this particular question. Messrs 11 O'Clock Limited of City opened a branch. Once again, branch is being opened at City X, and branch is being opened on 1st of April. Here it is written goods are sent to the branch office at a selling price. At a selling price means at invoice price. I have told you that invoice price and selling price, unless and until otherwise stated, will always remain same. So at a selling price or invoice price, which is 125% of the cost price. Which is 125% of the cost price? What does it mean? In this particular question, this is your 2.13. In this particular question, it means if your cost is 100. Now question states that goods are being sent at a price which is 125% of the cost price. So first I compute here 125% of the cost price. So 125% of 100 will be equal to 125. So indirectly it means goods are being sent at what we call 125. This is the cost and this is the price at which goods are being sent. That means this is the invoice price, because question states that goods are being sent at 125% of the cost price. So indirectly it means if the cost price is 100, your invoice price must be 125 and the margin will be 25. So later on when you are going to frame the rates, so you will consider cost as 100 and your margin will be equal to what we call 25, and your invoice price will be equal to 125. So rate of loading will be 1 by 5 on invoice price and 1 by 4 on cost. Further, in this particular question, you are being given goods sent to branch at cost to head office. So this item is at cost, first of all, because cost to head office is written. Then cash sales, credit sales are given in this particular question. Cash collected from debtors, returns from debtors are also given. Discount allowed to debtors are given. And then total expenses 30 plus 8, 38 plus 12, 50,000 are the total expenses. Spoilage is also given. And in this question, normal loss is also given. Correct? So under stock and data system, we are supposed to solve this particular question. Actually, here I have given net answers only, and that is the reason I am solving it. Otherwise, you should be in a position to do this particular question. So this is the question 2.13. Correct? 2.13. Now we will do 2.13. Now in this particular question, first of all, as usual, branch stock account. Branch stock account. Branch stock account. Correct? This is your branch stock account. Then we will be preparing here branch adjustment account. Branch adjustment account. And then branch P&L. And then finally branch debtors. So these are the relevant accounts which we need to prepare under stock and data system. Well, I will solve this particular question, but I am giving you 5 minutes. First of all, you try to solve it of your own. It's a test. Correct? Class is still on. I am taking a 5 minutes of break. Correct? If I will take 5 minutes of break, and in the meantime, I will use it to bring my classes back also, because I'm having a bit of problem without classes. Correct? So you try to solve this question. I'm giving you 7 minutes to solve the same. 7 minutes. So welcome again after the break. I'm sorry actually to make you wait for a while. Now you let me know actually whether you have given a try to this particular question or not. 2.13 we were talking about. So well, if some of you have given it a try, it's nice, and even some among you who haven't, no problem. Kindly pay attention. So opening stock in this particular question cannot be there. So goods sent to branch. I told you earlier goods sent to branch is actually at cost price, and the cost price is 4,50,000. And rate of loading on cost will be 1 by 4. So will be 1 by 4. So you are going to apply 1,12,500. 1 by 4, it will be equal to 1,12,500, and 5,62,500 will be the invoice price of the goods sent. Correct? So now on the opposite side of branch adjustment account, we will write load on goods sent to branch account. Goods sent to branch account is equal to 5,62,500, and now it is at invoice price, so we shall use the rate 1 by 5, and the amount will be 1,12,500. 1,12,500. Then we have in this particular question cash sales and credit sales. Amount of cash sales is 2,10,000. So you will write here cash sales 2,10,000. Amount of credit sales is equal to 3,20,000. So credit sales 3,20,000. And amount of credit sales you must not forget to put on the debit side of the branch debtors. So credit sales 3,20,000. New branch, so opening balance cannot be possible. Opening balance brought down, not possible. Cash collected from debtors, now we are being given, so I will write here simply by cash. 2,85,000 is the cash received from debtors. Then we have got returns from debtors. Now sales return, now you should know that first of all we need to put it over here, because we write credit sales on the debit side and sales return will come corresponding to it. And because we write credit sales in the branch stock account, we need to write here sales return 10,000. Sales return 10,000 will also be written over here. Now in this particular question, discount allowed to debtors are given. Discount allowed to debtors is equal to 8,500. So discount 8,500, you are going to write here 8,500. And discount will also be written on the debit side of P&L. So here also we shall write here discount allowed. That is equal to 8,500. Correct? And after this, cash sent for expenses. So total expenses I'm directly writing 30 plus 30 plus 8, 38 plus 12, 50. So 50,000 total expenses. Why to waste time? 50,000. Then we have spoilage in this particular question. Spoilage, deficiency, shortage are one and same thing. So spoilage in this particular question given to you is 10,000. So you will be writing here 10,000 first of all. After that, you will take the loading, load on, spoilage. Amount of spoilage is 10,000. Rate of loading is 1 by 5. So 2,000 will be the loaded portion, and spoilage at cost will be written over here. Spoilage at cost. My spoilage at cost will be 8,000. Then in this particular question, we are being given normal loss. So normal loss is also given, and so many times I have told you normal loss, once it will be put on the credit side, normal loss means normal loss of goods. So normal loss of goods is 15,000, and then full amount of normal loss will be written on the debit side of branch adjustment account. It is not broken into loaded part or what we call cost part. 15,000. So it's a simple question, not very tough. Cadet should be in a position to do. In this question, our debit side is bigger in comparison to what we call our credit side. And the balancing figure will be 17,500. Let me also tell you. And I need not require to tell you what you should consider it, because in this question, when balancing figure appears on the credit side, the first preference is given to the closing stock, and closing stock is not given in the question. So we will consider it as closing stock. Is it clear to you? And because it is closing stock, we must write here loading also. So loading on closing stock, and the closing stock is 17,500. So 1 by 5 will be your loading. That is equal to 3,500. 3,500 will be your loading. Then you will tally out branch adjustment account to find out your gross profit. Your gross profit in this particular case will be, gross profit will be 1,12,500 minus 5,500 minus 15,000. It must be equal to 92,000. So gross profit will be 92,000. Now gross profit will be put on the credit side of P&L account, and here you are going to write 92,000. 92,000. Correct? So gross profit 92,000, and now you are going to tally it out to find out your net profit. Now in this case, your net profit will be 25,500. Net profit 25,500. And finally, you are going to actually tally out your branch adjustment account. And if you are going to tally your branch adjustment account, you will get balancing figure as closing balance, but it is only for academic interest, as I told you, and there is no practical use of it now. 16,500 will be your closing balance of the debtors. So this is how you need to do this particular question. After having completed this particular question, let's see what is given in the next one. Next question is related to manager's commission. This question is related to manager's commission, correct? Now in this question, it is given a head office at Mumbai has a branch at Chennai in charge of a manager. So head office is in Mumbai. This is our head office, and our branch is being handled by a branch manager. This is our branch, and of course there is a branch manager in this particular case. Further, here in this particular question, it is stated that ratio of gross profit on turnover at branch was 25%. When we say ratio of gross profit on turnover, turnover means sales, and sales stands for invoice price. Is it clear to you? So in this particular question, you will presume invoice price as 100 because it is given that rate of profit on turnover, and turnover basically stands for, as I told you, sales, and sales stands for invoice price. So margin will be 25 and your cost will be equal to 75. So your rate of profit on cost will be 1 by 3, and rate of profit on sales will be, or on invoice price will be equal to 1 by 4. Another point in this particular question is branch manager is entitled to a commission of 20%, but subject to a deduction from such commission is sum equal to 50% of any ascertained deficiency of the branch stock account. Now, as per the terms, we are committed, that means head office is committed to deliver a commission of 20% to the branch manager. Branch manager is entitled to 20% commission. So branch manager is entitled to 20% commission. That means whatever profits will be there, 20% of that will be given as commission to the branch manager. But besides that, there is a rider attached to it. Rider means another condition attached to it. The condition is that out of your commission, we will be subtracting 50% of the deficiency. So whatever your commission will be, in case if there will be some deficiency, then 50% of that deficiency will be subtracted from your commission. Are you getting my point or not? Suppose if there is deficiency, then we will take 50% of that and we will subtract it from commission. That means this much of commission then will be paid out to branch manager. Generally, this condition is attached so that branch manager takes some steps to, so that there is no spoilage or no deficiency, to what we call motivate him to work with greater care and caution, we generally put up such condition before the branch manager. Further, all goods are supplied to the branch by the head office, and from the following figures extracted from the branch books, calculate the commission due to the manager for the year ended 31st December 2027. Now, in this question, actually, we are supposed to compute only the total amount of commission which is due to him. Further, it is written in the question, stock at cost. Now, this item is at cost. Goods received from head office, this is also given at cost. Then we are being given sales. Of course, these sales are cash sales because opening closing debtors are not there. Then there are some what we call establishment expenses. And another important point is drawings by manager against commission. Drawings by manager against commission, what does it mean? It means manager has already withdrawn 1000 rupees in advance because manager also knows that he will get some commission. So he has drawn some amount. He has drawn some amount against commission indirectly. It means 1000 rupees of commission is already given to him. First of all, we will compute 20% of the net profit, whatever figure will be there. Out of that, I am going to subtract 50% of the deficiency in case if there is any deficiency, correct? So after subtracting that, we will come to know how much commission actually is of branch manager. And whatever commission is there, now we will tell to the branch manager, you have already taken away 1000 in advance. So now we will subtract this and this much is due to you now. Remember one thing in this particular question, we are supposed to compute the amount of commission which is due to the branch manager. And further it is given that stock at selling price. Stock at selling price means basically invoice price which is given to you at 1 lakh. So this is the question. It's an interesting one. Let's have a look over here and then we will wrap it up. So in this particular question, as I told you, this is your question number 2. Branch manager's commission. Where is the question? All the sheets. Just let me pick up the sheets actually, whether sheets are there or not. Let me see. This is 2.13. This is this is 2.12. Where is the question? This is the question. Sometimes all these sheets actually get intermingled. So 2.15 is the question now which we are doing. So 2.15. In 2.15, the first thing which I am going to do is what we call analyze the rates. When we will analyze the rates in this particular case, we will write here cost price, margin, and then I will write here invoice price or selling price or turnover, one and same thing, correct? And because in this particular question rate is given on invoice price, we will take on selling price, actually it is given, so we will presume that it is given on invoice price. And the margin rate is 25, so cost will be your 75 as I told you earlier. So your rate of profit on cost will be 1/3 and rate of loading on invoice price will be equal to 1/4. Second point here is, okay, now ledgers. Now we will prepare the ledger accounts, and under the ledger we shall be preparing branch stock account, branch stock account. This is your branch stock account. Why we are preparing branch stock account in this question? Because we want to know whether there is any deficiency or not, correct? Because its commission carries a condition that in case if there is any deficiency, it will be subtracted from the commission 50% of that. Branch adjustment account, and as usual now branch P&L account. This is your branch P&L account. Branch P&L account. So in order to comprehend this particular question, first line which is given to us is opening stock, but opening stock as you can see is given at cost. So this is the cost price which is given to you 90,000. So in order to convert it into invoice price, I will have to apply the rate of cost That is 1 by 3, 30,000. And this item will be now at invoice price 1,20,000. Correct? Now we shall write over here load on opening stock, load on opening stock 1,20,000. This is the invoice price, and rate of loading on invoice price is 1 by 4. However, we are going to get the same amount of margin, 30,000. Now we are being given goods received. Actually, in this question, goods received are given. If in the question, see, actually goods received are given. Goods received. Suppose if there would have been some goods in transit in this particular question, then I would have had added it to received amount, then I would have had got goods sent to branch account. Because here we are supposed to write goods sent to branch account. Now in this question, because goods in transit is not given, so whatever goods which are received by the branch will be presumed have been sent by the branch manager. So goods sent to branch manager will be considered 4 lakh, but once again it is at cost price. It is at cost price 4 lakh. Sorry, goods received from head office is given. 4 lakh is sales. Extremely sorry. 4 lakh is sales. Goods sent to branch at cost is 3 lakh actually. And now we will apply 1 by 3. It will become 1 lakh. And the invoice price will be 4 lakh. So you must have sent goods at invoice price of 4 lakh. So goods sent to branch account 4 lakh into 1 by 4. That is equal to 1 lakh. Next point is sales. Obviously, because in this particular question, opening closing debtors are not there, logically all these sales are cash sales. But anyway, whatever sales it might be, we have to put it over here, 4 lakh. And then establishment expenses are given to you. Establishment expenses. Establishment expenses are 10,000. Drawings by manager against commission is the next item. What will be the treatment and where it will be written, I will let you know. And after that, we are being given closing stock. So closing stock at selling price, that means invoice price, it is given, and amount is given to you as 1 lakh. And you will be writing it over here, load on closing stock. And closing stock 1 lakh, it is at selling price. Remember one thing. So 1 by 4 you must apply to get loading amount of 25,000. So this is all what is given to us in this particular question. So first of all, I am going to tally it out. So debit side total is 5,20,000, whereas credit side total is 5 lakh. That means balancing figure is appearing over here. Now balancing figure obviously is your 20,000. Now balancing figure is 20,000, no doubt about that. We will consider this balancing figure as deficiency because first preference is given to closing stock and it is given in the question. So if it is given in the question, now we have to treat it as deficiency. Deficiency, shortage, spoilage. So this is your deficiency. So in this particular question, there is deficiency number 1. Obviously, the amount of deficiency, now we will have to split it. We will write here loading on deficiency. Deficiency amount is 20,000. So 20,000 into 1 by 4. 5,000 will be the loading portion. And deficiency at cost, we will write over here. Deficiency at cost. 20,000 minus 5,000, that is equal to 15,000. Correct? Now we are in a position to compute the gross profit also. 1,30,000 minus 30,000. So we are able to find out gross profit in this case quite easily. Gross profit is equal to 1 lakh. This is our gross profit. Now we will write gross profit on the opposite side. Gross profit is equal to 1 lakh. Now just pay attention over here. Suppose if I tally our profit and loss account, so 1 lakh minus 25,000 at this moment our profit is 75,000. At this moment it is 75,000 profit. And branch manager is to be given 20% commission, correct? So 20% commission is to be given. It is not written that he is to be given commission after charging his commission. It is not written. It is simply given that he is to be given commission of 20% and our profit is 75,000. So here we will have to do the working wherein we need to find out manager's commission due, because this is the main demand of the question. Manager's commission due. Calculation of manager's commission due. In order to compute the same, first of all we'll compute his commission. What will be his commission? His commission will be quite obviously 20% of the net profit. So 20% of 75,000, at this moment our profit is equal to 75. So we will compute 20% of same and his commission will be equal to 15,000. This is his commission, no doubt about that. But as per the condition or agreement, we are supposed to subtract 50% of the deficiency, less 50% of deficiency. So in this case there is deficiency and we will subtract 50% of deficiency. Now my question is, what amount of deficiency should I pick? 50% of. Some of you may tend to say, sir, deficiency amount is 20,000, so we should pick 20,000. No. Deficiency which is appearing in the P&L, deficiency at cost which is appearing in the P&L, you need to take that amount of deficiency. Reason being is that because commission is based upon profits. And in the P&L you have written deficiency as 15,000. So it is better to consider deficiency at cost. Is it clear to you? So 50% of 15,000, 7,500 you are going to subtract. After subtracting this particular amount, now you are left up with 7,500. That means this is the commission of the branch manager. Because as per the terms, he is to be given 20% commission, number one. And you are supposed to subtract 50% of the deficiency, which you did. So still 7,500 is there. So this is manager's commission, no doubt about that. So manager's commission is equal to, manager's commission is equal to 7,500 without an iota of doubt. This is manager's commission, no doubt about it, 7,500. But question is asking, what is the amount due? As I told you, because it is given in the question, drawings by manager against commission, that means the manager has already drawn 1,000 rupees. So drawings by manager against commission means you have already paid this. You have already paid. Drawings against commission. Drawings against commission means your entity has already paid this much. Drawings against commission. So drawings against commission is 1,000. That means manager has already taken away 1,000 worth of commission. So 6,500 is due to him. This is the amount of commission due. Is it clear to you or not? This is commission due. This is the amount of commission which is due to the manager. And if you want to present it in the P&L, because so far our net profit is 75,000, now you will write here manager's commission. Now manager's commission, how will you reflect? See, you are going to write here paid. You have already paid 1,000. When I am writing here paid, it means drawings against commission I am writing. So drawings against commission is 1,000 and plus due. Due means outstanding. 6,500 we are supposed to pay him still. So 7,500 is total commission. And now we can get the net profit after commission. So net profit after commission will be equal to 67,500. So this is how you can present it this way around. Is it clear to you or not? Correct. So after having completed this particular question, now we will stop this session over here because already it's been a pretty lengthy session. So I shall meet you then in the next session. Till then, time to say goodbye.